Good morning, all. Good morning, everyone.
Sir. Good morning, sir.
Okay. I just wanted to confirm that you can hear me. So where did we stop in our last class? Well, where did we stop? Can you guys hear me? Okay. I think we are done with business period. We are done with that. Okay. We are okay. Loss relief. Thank you. We have done loss relief. Okay. So today we are going to be looking at adjusted profit. Okay. Good morning, everyone. Thank you, that person that responded to where we stopped in last class. So, a quick recap of everything that we have done before now. As of today, I can boldly say we are done with basis period, and we have also done our loss relief. We are done with that. So, let's move on to the next topic for today, which is concept of adjusted profit. So I can also call it uh, trading, trading profit and loss adjustments. Trading profit and loss adjustments. So what is this trying to tell us? Now, in the preparation of your financial statements, the accountants would have followed the accountants would have followed um, the accounting principle, such as GAP, isn't it? GAP rather, generally acceptable accounting principle, such as IFRS, such as IFRS. But at the end of the day, um, these are financial statements that have been prepared based on principle that is only acceptable in accounting. So for the taxation purpose, all these principles are not, some of these principles are not allowed. And that is why we need to adjust the financial statements to the tax statements. in adjusting the tax statements, what do we need to do? And what is tax profit statements? For tax profit statements, this statement is prepared following the tax laws, such as companies income tax act, petroleum profit tax act, petroleum industry act, etc. So in accounting, for example, there are some expenses that accountants would most likely recognize as expense. For example, depreciation. For example, uh, bad debt. For example, rents. For example, salary. Now, what accounting is trying to do is to ensure that all expenses captured in the financial statements. And in such a case, this does not consider whether the expenses are business related expenses or not. So any expenses incurred by the company, any expenses incurred by the company will be recorded. What are they trying to do? To ensure that expenses are properly and adequately recorded. Now, when it comes to taxation are very keen on the type of expenses recorded for tax purpose. And these expenses must follow this stated criteria. Criteria number one, the expenses must be whole, must be exclusive, must be reasonable, and must be necessary. Osman Amadu, you raise your hand. Do you have any question?
Good morning, sir. I wanted to find out if you have shared the tutorial materials for this topic.
No, I have not.
Okay, sir.
I'll share after the class. I'm
All right,
sorry
sir.
about that. Okay, let's continue. So, whether the expenses is wholly, exclusive, reasonable, and necessary for the purpose of generating revenue. Please give me 1 second. Let me share the material. Okay. Are we there? Have you all received the material? Have you all received the material? You guys are not always responding. I don't like this. This is not the class I envisage. When I'm talking to you, you respond. Let's know where we should communicate. This is not radio that will be talking and nobody will answer. Or mute your mic and talk.
Yes, we've gotten it. Thank you.
KG, God bless you. Thank you. In fact, for what you have done this morning, I'll be asking you questions going forward. And I'll be talking, nobody will respond. That's not the way to go. Let everybody be in this class. If you have something that you are doing that is distracting you, please leave those things and focus. You know you have paid, and I want you to do well in this exam so that you not go and meet the new tax law. For those that will be meeting the new tax law, it's a whole lot of work. I am telling you. So please pass this one and just go, okay? That new tax law, no be play. I've been writing it since I've not been able to finish it. For close to 7 months now, I've been writing the textbook. So I know what I'm saying. Kembalo, you want to say something? Okay.
I was logged out, so I just rejoined.
Okay, welcome back, bro. All
Thank
right,
you, sir.
thanks. All right, let's go ahead. Did we have anybody that's just joining? Jackson, you are just joining. I've not met you before. And Oluwatosin Folawe, I've not met you before. Sarah, you're welcome. Sarah Mustafa, you're welcome. You didn't join last week. Jackson, how are you?
I'm fine. Good morning.
Okay, tell me about yourself. Where are you calling from?
Okay, I'm in Lagos.
Okay.
Yeah.
What do you do?
I do banking. I'm a banker.
Okay.
I just have this tax to
go. Okay.
go. Yeah.
Well, all right. No problem. Bele. Welcome.
Thank you.
Folawe, tell me about yourself.
Good morning, sir. I'm Oluwatosin Fawole. I'm a banker and I have 4 papers to go.
God will make it easy for you. Bele, welcome. Yeah, Sarah Mustafa, even though you are just joining the class today, introduce yourself.
Okay. Good morning, sir.
Yeah.
My name is Sharafa Mustafa.
Sharafa, sorry, bro. I'm sorry.
Sharafa Mustafa. Okay. So I'm an accountant.
Okay.
So I still have the 5 papers to go.
God will make it easy for you. Inshallah.
Amen. Thank you, sir.
All right. Who else? I'm seeing for the first time in this my class. Okay. Every other person. This Boluwaji.
Yes, sir.
You are new in my class.
Thank you.
You are from Ondo State?
No, I'm from Osun State.
Okay. Introduce yourself.
My name is Boluwaji Gabriel.
Okay.
Presently, I'm in Lagos.
Okay.
HR.
Okay.
I still have 4 people to go.
God will make it easy for you. And
Amen.
for every other person here, God will make it easy for you.
Amen.
All right, thank you. Abanga, you are scrolling my screen. Leave my screen alone, this man. Let me go and restrict you. Abanga, leave my screen. You are not the one presenting. You have taken over my screen. Leave it. Abanga, you are very wicked. I've taken over. Abanga is struggling my screen with me. This man. Leave my screen alone. Okay, let's continue. Thank you. I see someone just joined now. Okay, let's continue. So, as I was saying, I said, if you had followed me from all the story I've been talking about, you will notice that considerably, financial accountants, the way they prepare their income statement would have warranted all sorts of expenses, which, whether it's business expenses or not business expenses, all they're just trying to do is to ensure that all expenses incurred by the company are recorded. Let me put it that way. Okay. Now, for tax purpose, even though you have recorded all manner of expenses, such expenses are not allowed. There are some expenses that are not allowed for tax purpose. And I'm now saying for your expenses to be allowed, there are criteria that must be followed. Number one criteria is that the expenses must be wholly, must be exclusive, must be reasonable, and must be necessary. I start from necessary. What is necessary? What does it mean? When I say an expense is necessary, it means that that expense, without which you incur that expense, you cannot possibly perform your activity. So, if I say expenses is necessary, that expenses is very, very important. Very important. Without which the company cannot perform its activity. For example, in this our Zoom class, one expenses is very, very criteria, which is subscription for Zoom. Zoom license. If we do not have Zoom license, we cannot teach this class effectively. You will see that whenever we are teaching you, the Zoom class does not cut us off. It's because we are subscribed for the Zoom class, for the Zoom license. Ordinarily, you remember, basic Zoom is just 40 minutes. after which you are locked out. Our own is not like that. Because why? Because we have made subscription for it. So it is necessary that we incur these expenses for the purpose of generating taxable income, without which we will not be able to what? Carry out this expense, carry out this project that we are doing, that is this teaching. Another thing that is very key for this is staff salary. Are you telling me that if you are not interested in paying your lecturers, would they be in the class? No, they will not come. Nobody does anything for free. So the lecturers are in the class basically because we are going to pay them. So if we are not going to pay them, they will not come. So therefore, these expenses is necessary for the purpose of generating income for equity professionals. Okay? So that is that. Let's go. Necessary. For reasonable rather. Reasonable. Reasonability depends on some conditions. Number one, the industry in which the company operates, and the level of income of the company is very important. So what are we saying? We are saying that this industry in which the company operates, for example, you want to incur some certain expenses, and the expenses is way more than what the industry demands. Say, for example, in the industry, staff salary is, let's say, 100 million. You are now paying your staff, and just hypothetical example, you are now paying your staff 200 million, where your income is 200 million. It becomes unreasonable because there are some other expenses that you're supposed to have incurred. So the tax authority will be placed on an inquiry that is it that you did not pay for any other thing like electricity, like rent? Is it that you just use all the income you made for salary? Even though you are doing this kind of program, Zoom, is it that you did not pay for license? You don't pay for data, all those things. So tax authority wants to know. In the industry, comparatively, the industry pays 100 million. Why are you paying 200 million? They also want to know. So if you are not able to reasonably justify all this, the expenses will not be allowed. So the best bet the tax authority could do is to restrict it to industry benchmark and tax the remaining. Okay? So that is that. We want to also look at the materiality of the expenses. Materiality is very important. And I'm very sure some of you, in your financial reporting or corporate reporting or business reporting, you must have been taught the effects of materiality. You must have been taught the effect of materiality. So materiality is also very key in this regard. So that materiality that you guys have done is very important, because what is material to company A is not material to company B. Okay? So materiality is very key in this regard. So the test of materiality is another thing that the tax authority will look at. Any question? Okay, in the absence of no question, we move on to the next one. The next one is exclusive. Now, what is exclusive saying? Exclusivity is more or less like a jealous accountant, a jealous tax authority that is saying that before you recognize any expenses, it must be a loan for the business. It must be a loan for the what? For the business. So the benefit of the expense incurred must be for the business alone. So we are talking about apportioning costs. Do not apportion the cost. And any cost that you are going to recognize should be for the business alone. So the business alone benefits from the costs. So if the business alone benefits from the cost, that means it is exclusively for the business operation. Do you understand me? Any question? Having said that, the next one that is very key, not see your screen, sir. Is there any other person seeing my screen?
Yes, I can see your screen.
Thank you. So log out, Fatima, and log in back. So the next one is Wholly. Wholly is the next one. So for Wholly, that means the entire cost must be incurred for the purpose of business. Entire, everything is for the business. Where it is not, where we cannot, where, for example, you incur, let's say, 100 million, and it is not the entire 100 million that goes into the business, the portion that goes into the business is the only one that will be recognized. Do you understand me? So the entire portion that goes to the business will be recognized. So indirectly, we are saying for the purpose of Wholly recognition, the business alone must incur the expenses and the entire cost must go into the business. So that is that. Now, having said this, it is very important that we look at the formula for computing our tax adjustment formats. So you remember in your financial accounting, we have net profit. We have net profit. Now, if you are given a financial statement, so, and you are given net profit, profit before tax, or profit after tax. You do not take profit after tax, you take profit before tax. Do you understand? So what is important is the profit before tax. Okay. You are going to do the following adjustments. Taxable income. Excluded. Taxable income excluded. What are we doing to taxable income excluded? What does that mean? We are saying there are some income. Oh, jegede now, stop. So taxable income excluded. So this income is taxable, but it is excluded. What does that mean? What is the implication of that on your profit? We said an income is taxable, but was excluded. The income is taxable, but was excluded. What is the implication of that on your profit? Has it overstated your profit or understated it? Someone should answer that. Has it overstated your profit or understated it?
It overstated our profits.
Explain that.
It overstated our profits in the sense that those taxable incomes which were excluded were supposed to be deducted from our profits.
Who else?
Hello, sir. I think to me it has
I'm with you.
understated. To me, it has understated our profit because what we needed to add to the profit, we did not add it. So it has understated our profit. Taxable income that we needed to add, we did not add it.
That's all.
Can someone else confirm that?
Yes, sir. If our income has been understated for any reason, then it means that our profit definitely will have been affected by being understated too.
Hello, sir.
Yes.
Hello, sir.
I'm with you.
Yes. The way I understand it, we are lessening it because when we say taxable income, maybe this is an income that was previously taxed before we end it, or at the point of ending it, it has previously suffered tax. So because of that, in order for us to get our adjusted profit for tax purpose, we need to remove it. So also the expenses that was incurred in any that income.
Okay. You guys are making sense? Okay. So when they say an income, I want to show you some scenario. I want you to understand this because once you understand this concept, you will not have any other issue when we get to complex situation. When they say an income, let's say we have a net profit of 80,000 naira. And they now told us, so before arriving at this net profit, when they are doing tax audits, the tax auditor noticed that 20,000 received by the landlord was not recorded before arriving at this net profit. What is the effect of that? What would the tax auditor do? So what's supposed to be the net profit of this taxpayer? Is it that the net profit will be 60,000 or will it be 100,000? I'm with you.
100,000.
100,000. 100,000. Thank you, Lara. 100,000. Now, if it is 100,000, that means taxable income excluded or omitted should be added back. Abi, I add it back to my net profits. Abi, the next one, non-taxable income. Included. What has it done to our profits? Has it overstated our profits or understated it?
It has overstated it.
So what do we do?
We remove it. We lessen it. Deduct it. Sorry.
Yes, it's okay. Are you guys in tune with what he said?
Yes, sir.
Yes.
Okay. There is no contrary opinion. My guys are leading the course in this class today. Ladies are very, very dominant today. They are very, very dominant. They are not saying anything. Abiodun, why have you not been talking? Dorcas. A 10. You two have not been talking. Elizabeth, none of you. KG, you did not talk. Lara, you did not talk. Okay, so what about if we have allowable expenses omitted? What have we done to our profits? Has it overstated our profit or understated our profits? Let's see, maybe the guys will still be the champion in the class today. The ladies are very, very, they are still sleeping. They must have worked overnight. Abby? Yes, the ladies want to take the lead now. Oh yeah, I'm listening. Yes, I'm listening. You are not listening. Who is that? Lara, thank you. You can see the ladies are now taking charge. The guys are very, very dormant now. They are not saying anything. So it has been overstated. Correct or not? What is the effect of that on our profits? Overstatement or understatement?
Overstatement, sir.
Overstatement.
Yes. Yes, I give it to you. It's overstatement. So allowable expenses included. No, excluded. We said the effect of that is overstated. So if your profit has been overstated, are you adding back or you are subtracting?
Subtracting.
Correct. Lara, you missed that. You are subtracting. If it has been overstated, to correct that is to subtract. So let's go and do hypothetical scenario. So imagine your net profit is 75,000. And you're now told that 20,000 expenses was not recorded. To get your adjustments, that means there's an expense that's supposed to have been recorded. So what to do is to take the expenses now and subtract it from the profits to have 55,000. This should be your adjusted profits, 55,000. So that's why we are subtracting. Now the next one, non-allowable expenses included. What would that have done to our profits? It is non-allowable expenses included.
Understated.
Understated or overstated?
Understated.
To correct the understatement, what do we do?
We add.
We add back. So when you do this adjustment, it could be positive or negative. Either of the way, you had it like that. So we now have our adjusted profits or loss. So that is it. Any question? Oh yeah. Open your study material I just shared with you. Let's see a question there.
Page what, sir?
Go and see where adjusted profit is. Trading profit and loss adjustment.
Okay, page 31.
I'm not sure. Let me check. Okay, page 31. Sorry. Page 31. If you are there, I'm there. So before we go to solving question, let's discuss some types of disallowable expenses because you will need that. It's very important. Now, what are disallowable expenses? These are expenses that are not wholly exclusive, reasonable, and necessary for the purpose of generating taxable income. So, what are these examples? Example number one, we have depreciation. Depreciation is not allowable. Why is depreciation not allowable? Let's go quickly. Now, number one reason for not allowing depreciation is depreciation does not involve movements of cash. Number two, it is just a provision. And you know that the purpose of depreciation is to make provision for the replacement of the assets, isn't it? To make provision for the replacement of the asset. That is the purpose of depreciation. Someone just entered the class. Who could that be? Okay, let's continue. So, and when you look at depreciation, for example, you will notice that if two companies, company A and company B, acquire the same assets and put it to production use at the same date, if they acquire the same assets and put it to production use at the same date, there's every possibility that the two companies will not be charging the same amount of depreciation. Therefore, I would say depreciation lacks uniformity. Depreciation lacks uniformity. Because it lacks uniformity, because the that acquire the same asset should use the same depreciation method. So company A can use any method that they like, company B can decide to use any method they like. So it lacks uniformity. Okay? Depreciation lacks uniformity. Therefore, we now say because of all this reason, depreciation is not an allowable expenses. So if you see it, what do? You add back. Okay? Number two, peradventure in the question, you see capital expenditure in the question, which is ordinarily not supposed to be there. Such will be added back. Example of capital expenditure. When you see renovation of assets, is capital in nature. When you see refurbishment, is capital in nature. Okay? When you see, so all this expenditure incurred, they are to extend the useful life of the assets. And as such, it is not allowed. Where you see, if you acquire any assets and the cost of installation custom duty, freight charges, paid at the point of purchase are to also be capitalized and are not allowed. So these two to be added back. However, when you see repairs and maintenance, of fixed assets, such is allowed. So such is allowed. Do you have any question on this? The next one.
Hello, sir.
Yes.
Where can painting of building be classified?
Depending.
Painting.
Depending.
Okay. On what basis, sir?
A company could decide to be painting their building every year. That will be expense. Another company will say every 4 years we paint our building. That will be capitalized. Okay? But ordinarily, under examination condition, expense painting. Okay? Because painting is not really material. It's not really material. So I would advise that such should be expensed. The next one. Private expenses. Private expenses are not allowed. We are not allowed. Next. Provisional item. Provisional items are not allowed. Are not allowed. And what do we mean? When you say provisional item, you cannot be making provision in tax and you think it should be allowed. It's not allowed. Before you make provision, okay, the expense must have been incurred. Don't make provision for future costs. For example, you say provision for in anticipating that your tax or your customer will not pay, or you make provision for next year's advertisements. That will not work. Okay, you cannot make provision in such manner. Before you say an expense is allowed, such expense must have been incurred. So, for example, I have incurred certain expenses, but I have not paid the vendor. I have incurred it. I can accrue for that. Why? Because I have incurred it. So when the invoice comes, I will reverse the accrual and put in the actual invoice. So the reason why the tax authority year the accrual, where the tax authority will not disallow accrual, is because they know that in the subsequent year, the accrual would have reversed and the actual invoice would have been. So they will not disallow that. So don't make provision. Provision is not allowed. The next one. Let's discuss legal expenses. Legal expenses incurred in settling disputes with customer. Allowed. Expenses incurred in collecting debts. Allowed. incurred for retainership. Allowed. Legal advisory. Allowed. The following will not be allowed. Legal expenses. Incurred on tax appeal. Whether it was successful or not is not allowed. So you file with tax authorities, whether you win the case or you did not win the case, any legal cost you incurred is not allowed. The next one under that, any legal cost that you incur which is called policy is not well, you are fine for failure to file returns. You have for the next one. Sorry about that. It was the network. I'm bringing up my board. Are you with me?
Yes, sir.
Are you with me? Okay, good. So the next one, let's quickly rush through this. Bad debt. Bad debt is allowed. However, provision.
Sorry, please. Hello,
Yeah,
sir.
right.
Yeah, I didn't get the last part. You said after legal expense incurred on tax appeal. You're saying legal expense on costs. You didn't finish it, so I didn't get it. Can you repeat?
Okay.
Thank you.
I said legal costs incurred on that is contrary to public policy. If you incur legal costs that is contrary to public policy, is not allowed. That's what I'm saying. Okay, let's move on. So, provision for bad debt is not allowed. However, there could be two types of provision. We have the general and we have the specific. General and specific provision. Now, the general provision is not allowed. While specific is allowed. What do we mean by general provision? For provisions that you made, irrespective of the debtor category. What do I mean? Whether you know them or you don't know them, you are making provision for them. So, and for this kind of debts, it is very difficult to track. Therefore, the tax authority does not allow it. However, where the debt is to specific debtor, I know the borrower very well, and I know Dorcas. I'll be all doing this class. I know her house. If she runs away with our school fees, I will trace her to her house, even though the house is very dangerous to enter. But I will trace her there, and I will say, oh, yeah, give me my money, because I know her specifically. Abakasanga, I do not know you specifically. If you run away with our school fees, I cannot trace you. Okay? Because I cannot trace that debtor, such a debtor will be categorized as general debtor. The debtor I can trace will be categorized as specific debtor. Now, the fact that I can class you as specific debtor means that I can trace you, peradventure you did not pay my fee. You are owing me and you refuse to pay. I can trace you down. I can track you. That is specific debtor. So that is that. The next one is loss on disposal of fixed assets. Not allowed. Loss on investment disposal. Not allowed. The next one is payments to unrecognized pension fund. Not allowed. Not allowed. Staff loan written off. Not allowed. Preliminary expenses. Not allowed. And so on and so forth. The next one is taxable, non-taxable income. Number one, non-taxable income. Profit on disposal of fixed assets. Not taxable. Profits or sales of investments. Not taxable. Dividend. Is not taxable. The next one. Any tax exempt income is not taxable. So that is that. Let's quickly look at illustration. Illustration. Which one do you have there as illustration? Is it fortune? Abby? Do you have fortune in that question?
Hello, sir.
Yes.
I want to ask questions before we go further, sir.
Okay.
On the capital expenditure.
Mm.
Now, how do the tax authority authenticate if a company decided maybe at the end of every year, they know that the amount of tax they want to pay is much and decided to maintain their building, and they said that this is the amount of money they are spending on it and it's part of allowable expenses. How do that tax authority authenticate that this money is the purpose of doing it is to reduce the profit? And like general provision too, and the specific provision, how do the tax authority determine that that this specific provision they are making, the person will pay back, and they will now decided to allow it? Thank you, sir.
Okay. So, one thing that is very sure, I'll start from the beginning, from the back, is that is why most of the companies, especially banks, will do what we call KYC. Do you know KYC? They will always do KYC. The reason for doing KYC is to be able to track the customer down. Do you understand me? So, in a situation where you have done your KYC, then any provision you make on such customer is allowed. Because one of the things the tax authority will ask you is that, "Oh, show me your KYC documents to show that you know you have done your due diligence on this customer, that you can trace this customer in case the customer defaults." Do you understand?
Yes, sir.
So that is that. So the other one, the tax authority is also they are not against you renovating your building. They are not against you reducing your tax liability, provided it is within the ambit of the law. Okay, provided
The network is bad. I can't hear you again, sir.
it's and all that. Are you hearing me?
No, we can't hear you. I can't hear you. It was bad. The network was
Okay, I'm
bad.
back.
Okay, you are
Okay.
back now.
Network,
Yes, I
sir.
can hear you now. I can hear you now, sir.
Okay. So I said, provided the taxpayer is acting within the ambit of the law, the tax authority does not have any problem with us. Okay. So it is either you capitalize it or you expenses. Now, if you capitalize it, no problem. You go and claim capital allowance on it. If you expense it, what will happen? You treat it as expenses. So, and that will be it. Do you understand? So the tax authority is not going to be having any problem with you, but you should be able to prove to them that what you have done is within the ambit of the law. So there is no problem with that. Okay, let's look at the question on fortune. Fortune. A sweet and melodious voice you read for us. I don't want all this cracky boy's voice. I don't want no man should read it. Now, woman, I won't make you read that. Oh yeah. You know that your voice is cracking now. You know the sweet for my hair. And I know that they will not disappoint me. They will read it. I'm waiting now.
Sorry, sir. Fortune is on what page, sir?
Okay, which file do you have there? I can't see it. I don't have it.
Okay. Let me start from one.
Download is what is number one
Download
question
the
here.
enterprises. Exam level question one, download it. That one is on page 36.
What are you doing now?
Okay, the accounting year end of Download Enterprises is March 31st every year. The following is the statement of profit or loss and other comprehensive income for the year ended 2024. Gross profit for the year is 5 million naira. Less expenses. Salary is 1.5 million naira. Advertisement is 600,000 naira. Bad debt provision 240,000 naira. Motor vehicle expenses 200,000 naira. Loss on sales of machinery 80,000 naira. Interest on loan is 35,000 naira. Depreciation is 480,000 naira. General expenses is 280,000 naira. Repairs 180,000. Donation 70,000. Legal expenses 40,000 naira. Rent 60,000 naira. Entertainment 70,000 naira. All total expenses is 3,835,000 naira. And then profit for the year is 1,165,000 naira. Additional information: 1. Salaries. Mr. Danladi 600,000. Mr. Danladi's cook 60,000 naira. Manager's salary 300,000. Mr. Danladi's gardener 60,000. Others 480,000, totaling 1,500,000. 2. 25% of the building is occupied by Mr. Danladi. 3. Entertainment. Customer is 60,000 naira. Friends 10,000 naira, totaling 70,000 naira. Bad debts are for general and specific provision of 60% and 40% respectively. 5. Legal expenses. Defense of title to land 10,000 naira. Tax dispute 15,000 naira. Debt recovery 15,000, totaling 40,000 naira. 6. 20,000 naira out of the general expenses was the amount paid for installation of the generator. 7. Advertisement in newspaper and radio, 500,000 naira. New sign, 100,000 naira, totaling 600,000 naira. Required, compute the adjusted profit of Danladi Enterprises for 2025 year of assessment.
Adjusted profits is usually prepared on preceding year basis. It's prepared on preceding year basis. That means to prepare Mr. Danladi Enterprise adjusted profit is going to be on what basis? What year of assessment? What year of assessment?
2024.
They are not talking.
2025 years of assessment.
Okay, it's 2025.
Oh.
2025. Because the financial statement we are given here ended in 2024. So, do you understand that? Do you understand that?
Yes, sir.
Thank you. So, I will say what's the name of this company? Danladi. So, they asked us to come. We'll start from additional information. Number 1. Additional information 1. Salaries were Mr. Danladi, 600,000. Mr. Danladi's cook, 600,000, 60,000. Manager's salary, 300,000. Mr. Danladi's gardener, 60,000. Others, 480. Now, because we were not told specifically that this Mr. Danladi's cook and gardener are working in the enterprise of Mr. Gardner, Mr. Danladi, we are going to disallow the salary. It is private. So cook, 60,000. Gardner, 60,000. That is 120,000. Number 2, 25% of the building occupied by Mr. Danladi, 25% of the building is occupied by Mr. Danladi, is not for business. So that means rent. 25% of the rent will be disallowed. It's private. So how much is rent? 25% of rent is how much? How much? 1/4. That is 15. Any other information on this that can relate to that? Nothing. If you had rates, if you had electricity in this question, 25% of that would have been disallowed. Okay? Entertainment. Entertainment. Friends entertainment will be disallowed. Customer will be allowed. The next one, bad debts are for general and specific. So bad debts, they told us 60% is for general. 60% is for general. Why 40% is for specific? So I'll go to where I have that is 240K. 60% of that. Give me my value, please. Don't stop talking or give me my value, I beg.
144.
144. Thank you. God bless you. The next one. Defense of land title is allowed. Tax dispute. We don't want to hear that. How much is tax dispute? 15,000. Please hold on. Let me pick this call. Tax dispute. How much? 15,000. The next one. 20,000 out of the general expenses was amount paid for installation of generator. Is not allowed. Installation. You remember when I told you about installation fee the other time? It's supposed to be capitalized alongside the cost of the asset. How much is it? 20,000. The next one, advertisements in newspaper, 500,000. New sign, advert. New sign is not an reliable touch. So that is that for additional information. You will now go back to the body of the question. You go and look at it one after the other. Advertisement, we have treated all those. Loss on disposal. Loss on sales of machinery. How much? 80,000. Depreciation. How much? 48,000. That's all. So add everything together. What do you have?
Hello, sir.
Yes, using the
Sorry,
phone.
for the donation, if it's not specified, we should just allow it as allowable expenses, right?
Yes. But ordinarily, Danladi here is an individual. Okay? Danladi Enterprise is an individual. And an individual does not donate. Okay? But I am teaching you as if I'm teaching company. So that's why I just ignore it. Do you understand me?
Okay.
Examiner will not be testing you on individuals. So that's why I did not make mention of the donation. Ordinarily, if I were teaching skills level students, that donation I would have disallowed it. But I am assuming I'm just putting this, let's say it's a limited. I'm treating it as limited. Do you understand me?
Very
I'm
clear,
treating
sir.
this
Thank you.
treating as limited. Okay, give my value. All this together with this. What do you have? Adjusted profit. Whatever you have is your adjusted profit.
3,222,000.
By this.
3,229.
Say it again.
3,3,229,000.
Alexa,
299. 299. No,
Alexa,
2. Exclude.
Let's go again. 3.
3,299.
Uh-huh.
Sorry, 229. 229. Yes.
1,000.
Yes. Yes.
So that is that. Let's look at that. One more question before we call it a day.
I want to ask a question.
Go ahead then.
Sorry, why is the advertisement for the neon sign not allowed?
It's capital in nature. New sign is capital in nature. All those things that you see on your, what's it called? Display board is capital.
Thank you.
All right then.
Hello, sir.
Yes.
Please, the
Let's go
legal.
to question. The next one is question number 4. Go ahead. Question number 4. Be looking at that.
Okay. I was going to ask about the legal expenses.
Yes.
Okay, so it was broken down. We have the defense of title to land, we have tax disputes, and you have
Yes.
debt recovery. So, if I'm to go by the explanations this morning, tax disputes, legal expenses against tax disputes is not allowed.
Yes.
But how about this debt recovery
It's allowed.
is
You
allowed?
want to recover your debt now. You now engage lawyer to help you recover your debts. You now pay the lawyer. It will be allowed.
Okay, so how did we now treat it? Debt recovery.
So the fact that I did not add it back, it means I've allowed it.
Okay.
What I'm adding back here is the ones I did not allow.
Okay, tax disputes. Okay.
I've added it back. It's not allowed.
Okay. Thank you, sir.
Okay, let's go to the
Hello,
next
sir.
question.
Hello, sir.
Okay.
Before we go to, there are some expenses that look like capital in nature.
Mm-hmm.
At the same time, you look like this. Let me be specific. like this Christmas decorations. If you go to like this Senate Bank around Eco Hotel now, you see a
Mm,
lot of decorations they made
yes.
in that Victoria Island. Now, it's in form of like a advertisement, and it's in form of at the same time. I want to know specifically now, is it allowable expenses or disallowable expenses?
It is allowable expenses. What they are doing there is they are using that to display their brand. Okay? And also using it as a form of advertisement. It is allowed.
Okay, sir.
Sir, this adjusted profit is not aligning
Hello?
with what most of us have here.
I have 21549,000. 2,149,000.
Stay
Okay.
with me, 2149.
Okay, thank you. Okay, we'll move on to the next one. So the next thing that we're going to be looking at is question number 4. We need to quickly do that question because it's a long question. So, and we have about few minutes to go. Few minutes to go. So let's look at that. The following information relates to the new age Nigeria Limited for the year 31st December 2025.
Sorry, sir. Sorry, please. Sorry to draw you back. Advertisement for radio and newspaper is allowed, while news sign is not allowed. I think I have a faint idea, but I need to know why.
I have told you that neuroscience is capital in nature. It's capital. So when you see it in the exam, disallow it.
So the one on newspaper is not capital. If you look
Yes,
at the
sir.
amount,
It's not the amount now, it's the way we have been treating it for exam purpose. When you see neuroscience, it's not allowed. When you see, what's it called? Radio, television, advert, all those are allowed.
okay, thank you.
All right.
Thank you.
All right. So let's go ahead. So we are given the gross profits, profit on disposal, all those things. So I usually like to start with the adjusted additional information. So what is the name of this company? New Age. The examiner has to compute tax liability for 2026 year of assessment. So let's pick one after the other. I'll start with net profit. How much are net profit? 25,000. Add and deduct. So let's take it one after the other. Additional information number 1. Sundry allowable. They told us. Oh, number 1 is bad debts. Bad debts. Employee loan written off is not allowed. You are not a bank. You can't write off loan. General provision.
It's allowed.
How much? Specific
It's
bad examinations are allowed. Number next, bad debt, general expenses. Sundry expenses allowed. Lunch on voucher allowed. What's lunch on? Cafeteria, all those things that they give to employee, they are allowed. Subscription, trade, allowed. Club subscription is not allowed. Social club subscription. How much is that? 60, no, 48,000. Abi, we are done with that.
Hello, sir.
Yes.
I have a question about this employee loan written off. Now, as a part of the welfare service that a company may provide for their workers, if a company give loan, maybe let's say 200,000, and in that process, the employee died, and they were unable to recover the loan, what would then happen?
They will recover the loan. Before they give loan to anybody in the organization, they look at their entitlements. Do you understand me? They look at their final entitlements. That if this person leaves our company today, they are not even looking at it from the perspective of debt. If this company leaves my company today, this money I've borrowed this person, will I be able to recover it from his pension or gratuity? If the answer is yes, they can go ahead and give the loan. Do you understand me?
Yes.
So they will recover it at every point.
Okay, sir.
And it's not welfare. The company is not to be doing welfare. They are not supposed to be doing that. Okay, let's go ahead. The next one is legal costs. Costs. Legal costs. Under that, we have new lease. We have two types of lease. We have the short-term lease and long-term lease. The acquisition of both long-term lease and short-term lease are not allowed. The renewal the short-term lease is allowed.
Sir, your network, sir, we can't hear you.
Acquisition. Acquisition. Sorry about that. I was explaining acquisition of leases. So I said we have two types of lease. We have the long-term lease and the short-term lease. Acquisition of short-term lease and long-term lease are not allowed. Meanwhile, acquisition of renewal of short-term lease is allowed, and renewal of long-term lease is not allowed. Renewal of long-term lease not allowed. Renewal of short-term lease allowed. That is what I was explaining before the. So lease, you have to type and short. For long term, acquisition not allowed. For short term, not allowed. Renewal not allowed for long term. Renewal allowed for short term. So we're looking at this. When you see new lease, it is not allowed. Okay. How much is the new lease? 60,000. Customer claim 12. Repairs and maintenance. Decoration of new building. Are we going to disallow this or allow this? I think we should allow this. It's just ordinary decoration. The next one, repairs of plants allowed. Renovation of factory. Renovation of old factory. 170. Donation to political party. Not allowed. $150. Donation to ICAN. Not allowed. The donation that is allowed is to ICAN Building Fund. Do you understand me? Do you understand me?
No, sir.
Donation
No.
to ICAN is not allowed.
Why?
But donation to ICAN Building Fund is allowed.
Come again, please.
Donation to ICAN is not allowed. However, donation to ICAN Building Fund is allowed.
What is the difference
The
between the two,
next
sir?
one. Mofi Fund is the community building fund. The other one, just ordinary donation to ICAN. If you make donation to ICAN as a corporate body, it's not allowed. But if you make donation to ICAN Building Fund, building, fund they are building. You mean that is what the law says specifically. Donation to Boy Scouts allowed. Donation to Society of Blind allowed. That's all. We now go back to the body of the question. We now pick it one after the other. Under the income, profits on sales of investment, not taxable, 48. Dividend, not taxable, 1,000. We are adding back. So we are subtracting rather. They are not taxable income. Depreciation. That is all. We are done. So adjusted profit is the same thing as accessible profits. Okay? So what do you have? Less capital allowance. For the year. Capital allowance of the year is in the additional information. Our next class is capital allowance. So I'll see you in that class. Believe for the year. Believe for the year. Carry forward.
Sir, so I have a question.
Go ahead, please.
Okay, so for the additional information, the F side says the loan interest shown in profit or loss account is the loan interest to a friend of one of the management staff of the company.
Hey, Mo,
What are we?
no. I can't hear what you're saying.
Additional information F for the loan interest. What are we supposed to do with it?
Oh, I didn't see that. Sorry. The low interest shown in the profit and loss accounts is the interest on loan to a friend of the management staff of the company. It does not have any impact because the interest on loan, before we can disallow this interest, the interest on loan must have been granted at a rate below the market price. Okay? The question is to disallow it, but I'm not going to disallow it. The question is not complete. If they are said he gave the interest on loan to a friend at a rate lower than the prevailing rate and regard, just quiet. Okay? So I'm not going to do anything. I'll do not. So, what do you have when you added all this together? All this. What do you have?
Sorry, sir. Hello, sir. Hello, sir.
Yeah, Mushu.
Okay. I just want to know whether we are at liberty to make an assumption here. still on this interest on loan.
Yeah.
I understand the angle at which you have looked at it, and that is noted. But we also can look at it from the fact that the company is also not into the business of granting loan. And so on the basis of that, if I did that assumption and
You are correct.
disallow it for that purpose, am
You are
I
correct.
okay? Thank
You
you,
are
sir.
correct. You are correct. I like the path that you're coming from. That makes sense. So I want to toe that path so that we'll be on the same page. So the interest on loan. How much is interest on loan? But ordinarily, I would have also said that because the interest, I can borrow anybody money, but I like the angle that you came from, so I will disallow the interest. But how much is the interest on loan? I can't see it in the question.
200.
200. Where you do see 200?
After audit fee.
Loan interest is there? The third, the second item and the list of expenses.
Okay, 200. So add it back. You'll have your total profits. So what do we have as all our disallowable?
Sir, for this capital allowance, FTY is what? And RTY.
FTY is for the year, RTY is relief for the year, and CF is carry forward. So what do you have? Okay, I'm assuming that this answer here is 1,005. I'm just assuming it's not 15. So that is 20.
1503. 1503.
1503. So you have this 26,503. So you subtract from this, you have your answer. What do you have?
24966.
24966. So company income tax at 30%. What is the revenue of this company? Did they show us the revenue? This company, they did not show us the revenue. So assuming they show us the revenue, it should be, we'll use the revenue to determine the tax rate. But the revenue was not shown, so we just use 30%. So 30% of the total profit is what? Whatever you have is your answer. I am assuming it's 14,000 naira. So that will be your tax liability. So that will be the end of today's class. We'll meet again in my next class. You can download this yourself. We talked about that last week. Download it before I go. Export PDF, and I can't share from my side. I can't share. So you export it and share it from your side. Who has done that? Has someone done that for us? Okay, I'm assuming that someone would have done that. So, the end of this class. Good day to you. So when we meet in our next class, by the grace of God, we will start with capital allowance.